Hey guys, welcome back. And in today's video, we're going to talk about Sofi. There's been a lot of news lately with their most recent earnings report just coming out, and a lot of things that Anthony Noto said, and just things happening in general with the company. So let's get right into it. And it's worth noting that this has been a particularly significant time for Sofi as the company's story continues to unfold before our eyes. Now, first, they beat on EPS by reporting a negative 6 cents when analysts expected negative 7 cents, which is also down 50% year over year from negative 12 cents where they were sitting at Q2 of 2022. Now, this success can be attributed to several different factors. For one, they saw an impressive 44% increase in membership growth, which translates to over 6.2 million members so far. Now, this kind of growth is a testament to the effectiveness of SoFi's marketing plan, which has been carefully crafted to target its desired audience. And in addition to adding all of those new subscribers, they have also seemed to cut their customer acquisition costs down, which is obviously a benefit for many different reasons. But that just means that they can acquire more customers for a cheaper price. And this is a key indicator of SoFi's commitment to long-term growth and sustainability. And SoFi is unique because there's many other banks that rely solely on just referral bonuses and many other deals with credit cards and checking accounts. And SoFi Stadium is huge for them because so many singers and performers and NFL games are held all within this stadium. And that gives them a ton of PR and brand recognition while also building trust because most companies that have their own stadium are usually relatively trustworthy. And trust is super important for obvious reasons, but being a bank, it's even more important to them. And moving on from the banking side, another important part of their business is the banking technology aspect, whether that's Galileo or Technisys. And we did see a slight uptick in Galileo accounts after losing a larger client last quarter. Now, Galileo is a significant part of many investors when they're coming up with a thesis whether to or to not invest in SoFi, because Galileo presents an opportunity, as well as Technisys, to get in the ground floor of startups and other fintech companies and process their payments and provide the infrastructure that many of them need, as well as larger banks. Like they could go in and reinvent the JP Morgan backend and the Wells Fargo and Bank of America. And this presents massive opportunity as banking is known to be lower multiples, slower growing. If they're able to create the technology and service these other banking institutions, they could be generating really high margin revenue for themselves that will be extremely beneficial to the long-term shareholders. And back to the banking part of their business, SoFi, a major player in the lending industry, has shown impressive growth in loan originations, which have increased by 22% quarter over quarter. And this is a remarkable feat, especially for SoFi, given that their largest loan segment is student loan refinancing, and having that not even be in the picture because of what the federal government is doing by subsidizing these loans and potentially even forgiving them, it has really put them steps back on that part of their business. But with that out of the way, they've been able to grow their home loans and their personal loan parts of their business. And as the student loan refinancing comes back into it, they could see substantial growth from that. And furthermore, with deposits increasing at an accelerating rate, with 2.7 billion new deposits this last quarter, SoFi is expected to breeze past profitability with ease. And with all these strong numbers coming out of SoFi, that's why we saw a huge jump of over 20% Monday morning after they reported their earnings. Now, what does this mean going forward? With the quarter now in the books, it is clear that management's expectations of profitability by the end of the year is highly likely. And as this company continues to expand, it's expected that the profits will increase even more. And this presents a huge opportunity for investors, especially if you were able to get in a couple months ago when it was around $4, $5, $6 per share. But even now, at over $10 a share and a $10 billion market cap, there still is ample opportunity to grow. Now, when considering to invest in SoFi, it is crucial to take into account whether you believe SoFi deserves a tech multiple or a banking multiple. And while many investors believe that a banking multiple is appropriate given the growth that they've shown, it's important to analyze other factors at play. And with Galileo looking like it's going to reaccelerate and bring on more and more accounts, it is very possible that Galileo continues to just skyrocket into the future and it becomes even more of a tech play rather than just a banking play. Now, that's not happening yet, but it very well could, and it's just important to keep in mind that when you're investing or not investing in SoFi. Now, personally, I remain bullish on SoFi, and I will continue to hold my shares. I'm honestly not looking to add any more at this point, given that it's already a larger position in my portfolio. But it's important not to get in on the FOMO and just buy because you see it's going up really fast and you don't want to miss out. Because we've seen this stock go from under $5 now to $11.50, and now it's sitting somewhere around 10 as of Tuesday, August 1st. And who knows, we might see a huge run up as more people just flock into it because of the great performance this last quarter, and now they're seeing the vision of profitability and them potentially being a top 10 financial institution in the world. But with a higher valuation becomes more and more risk. So it's just important that you make your own decision and you go look into it yourself and see what you think this company is really worth and what the future prospects are for it. And don't just take my word for it or anyone on YouTube or on a podcast. With that being said, though, I do personally believe that it will be a top 10 financial institution within the next 5 to 8 years, maybe 10. And with that, that could be a 5 to 8x its market cap size today. So do your own research and see what you think. I just posted a video on why I think it will be a top 10 financial institution in the future, and that was my last video, and I'll link it at the end of this one. So with that being said, that's all I got for this video. I'll see you guys in the next one. Thanks for watching.